Now that we have more information about the different types of financial statements, we're going to spend time preparing an income statement, the statement of owner's equity, as well as a balance sheet. You ready? Let's do it. So we have a company by the name of Cantu Wealth Management Consulting. And they gave us information about this company for the month of September. We're going to prepare first the income statement for the month of September of 2019. So they gave us a list of accounts from cash all the way down to withdrawals. Your job is to understand which accounts are going to appear on these different types of financial statements. Because we're talking about the income statement, on the income statement, it only focuses on revenue accounts and expense accounts. So as I look at this list of account titles, you want to ask yourself which of these represent revenue accounts and which are going to be expense accounts. A few keywords. For the most part, if it's a revenue account, the word will end in the word revenue or income, such as fees income. And normally, if it is an expense account, the account will end in the word expense. So based upon that bit of information, I see that I have fees income as my revenue account, and here we have three different expense accounts. Perhaps you're saying, what about the cash, account receivable, all supplies? Those are all account titles, but they do not appear on the income statement. The income statement only lists revenue accounts and expenses. So let's go ahead and prepare the income statement for Cantu Wealth Management Consulting. So I'm going to pull up the templates that you all have on the Blackboard site under the blank templates. So the name goes first. It was Cantu Wealth Management and something else Consulting. All right, that's the name. We're preparing an income statement, and it's for the month ended September 30th of 2019. So the heading always goes first, the name of the company, the type of statement, and the time period being covered by the financial statement. The first section would be the revenue section, and we have the one revenue account title, which is going to be fees income. So I'll list my account title, and the amount is $155,800. That is the amount of revenue earned by this company during the month of September. Then we'll list all of our expense accounts. We have advertising expense, we have salaries expense, and we have telephone expense. So you must itemize list each expense account title and the amount of all of those expenses, $13,000, $32,000, and $1,600. So once you've itemized, you've listed all of your expense accounts, then get a total for all of your expenses. All right. So we add these all together, we have total expenses in the amount of $46,600. To determine whether we've earned net income or net loss, we're going to subtract the total expenses from our total revenue. And if that number is positive, which it is for us, that means we've earned net income for the accounting period. But if that number was negative, then a net loss has incurred. So in our first income statement For the month of September for this company, they've earned net income for $109,200. Okay? Next on, we're going to prepare the statement of owner's equity. And we can actually use this information to prepare our statement of owner's equity. So remember, the statement of owner's equity, your heading still goes first, and that's going to be Cantu Wealth Management Company. Let me do a little formatting here, merge and center. I'll make it bigger. Cantu Wealth Management, I can only spell consulting, not company, I believe it was. I'm getting there. There we go. Make that bigger. Come on. Okay. Statement of owner's equity, and it's for the month ended September 30th of 2019. For this statement, remember your first line item is our beginning capital balance, which we see was $53,400, was the owner's beginning capital balance. From the income statement, we're going to add in our net income or subtract out our net loss. Well, we had net income of $109,200, so we're going to add in net income of $109,200. I'm going to get rid of this net loss because we had net income for our particular one. And then any withdrawals? Yes. The owner took out $18,000 for personal use during the month of September. So now we're going to compare our withdrawals against our net income. Depending upon which is greater, we're going to either have an increase or a decrease in our capital account. So I'll subtract the withdrawals from my net income. Net income is higher, therefore we have an increase in capital for this illustration, increase in capital in the amount of $91,200. We're going to add the increase in capital to our beginning capital balance, and that would give us ending capital in the amount of $144,600. The statement of owner's equity, it shows the change in the owner's capital balance. It shows their beginning capital. It shows the net income or net loss that took place during the accounting period. It also shows any withdrawals made by the owner for personal expenses. Based upon the amount of net income and withdrawal, that would tell us whether we have an increase or a decrease in the owner's capital balance. If there's an increase in capital, we'll add the increase to beginning capital to get our ending capital balance. If by chance there was a decrease in capital, it's subtracted from beginning capital to get our ending capital balance. 2 statements down, 1 to go. You ready? So the last statement is going to be the balance sheet. So we have Cantu Wealth Management Consultant. We're preparing the balance sheet. And remember, the balance sheet is not for a period of time. The balance sheet shows your account balances on a specific date. That date being 9/30 of 2019. On the balance sheet, the first section, you will list all of your asset accounts. So we're saying based upon these account titles, which of these qualify as being assets? So the assets are going to be cash, account receivable, office supplies, and office equipment. So we got cash, account receivable, office supplies, and office equipment. So list the amount of each asset, $60,200, $8,000, $68,000, $6,800, and $75,000 for the equipment account. So once you list all of those assets, we're going to get a total for our assets, and they total $156,000. Now we know from earlier that the balance sheet must do what? It must balance. So you already have a check figure. If the asset section is correct, we know the other side must also total $156,000. Will it? Will it? Will it? Let's see. For the liabilities, we only have the one account title being accounts payable, and that amount totaled $11,400. So the total for our liabilities, again, at this point, you only have that one account title, is $11,400. Now remember that we're at the end of the accounting period, so we're going to show for each account their ending balance. So the ending capital balance is not this amount. That's September 1st. That was your beginning capital balance. It is now 9/30. The ending capital balance is coming from your statement of owner's equity. And the ending account balance was $144,600. So that amount is transferred over to the equity section of our balance sheet. Because again, we're now at the end of the accounting period, and for each account, we're showing their ending balance. We now want to add our liabilities plus owner's equity, and when you add those together, look at that, we balance. Boy, we back. They must equal your total assets. The assets total $156,000, same as the right-hand side of the accounting equation. Okay? So now you have prepared successfully the three financial statements, the income statement, the statement of owner's equity, as well as the balance sheet. Question is, once you prepare them, can you interpret the information? Let's do that. By looking at this income statement, we see that we earn a profit. We had a good month. We earn a profit of $109,200. The equity statement shows that our net worth or increase in capital was $91,200. At the beginning of the month, the company was worth $53,400, but now we have a net worth of $144,600. And from the balance sheet perspective, our assets total $156,000. From that, we owe our creditors $11,400, but most of our assets came from the equity, meaning it came from owners. So we're in a really good position. We did well financially. We have a lot of assets. We do not have a lot of debt. We're looking pretty good. Remember that after you prepare these statements, you must be able to interpret them so the clients understand what the numbers on these different statements represent. You got it? So watch the video as many times as needed to learn how to prepare, again, the income statement, the statement of owner's equity, as well as the balance sheet.